Welcome to our channel, where we'll show you how to retire rich or at least retire with enough money to buy a really nice rocking chair. Financial Tortoise's Kim recently compared his returns from index funds and rental property investments over the past 5 years. In 2017, Kim invested $50,000 in the Vanguard Total Stock Market Index Fund, VTSX, and over the past 5 years, the annual average return for this investment has been just under 9%. This means that his $50,000 investment has grown to be worth around $75,000 today, with $25,000 being the total return. At the same time, Kim also purchased a rental property with a $15,000 down payment. To calculate the return, Kim took into account the net rental income, the debt paydown on his mortgage, and the property appreciation. The net rental income was approximately $15,000, which was what remained after all the monthly expenses were paid. Most of the rental income went towards paying down the mortgage, which was around $12,000 over the past 5 years. The mortgage was refinanced last year when interest rates were lower, and Kim hopes this will speed up in the near future. To Kim's surprise, the biggest increase in returns came from the property appreciation, which was close to $90,000. The home is located in an area that has not historically had much appreciation, so it remains to be seen if this trend will continue. When all the returns are added up, the total return comes to $117,000, which translates to an average return on investment of 27% per year. This appears to be a better return than what Kim received from his index fund investment. However, Kim wants to add a caveat to this comparison. He believes that the net rental income and the mortgage paydown were predictable, but the home appreciation was not. In hindsight, Kim's decision to purchase the rental property in 2017 makes him look like a real estate genius, but he attributes his success to luck. The net rental income and mortgage paydown combined for $27,000 over the past 5 years, which is comparable to the $25,000 returned from Kim's index fund investment. Additionally, Kim points out that there are many factors associated with owning a rental property that are not taken into account in this comparison. These include the amount of work involved in owning and managing a property, the tax implications, and the liquidity aspect. Kim can sell his index fund tomorrow and have the cash in his account within a few days, but with a rental property, it is not so simple. He would need to sell the property, and all the transaction costs would eat into his returns. The paperwork involved in buying and managing a rental property should not be underestimated, and there are much fewer moving pieces when owning a simple index fund. Kim personally believes that both index funds and rental property investments can play a role in building a financial portfolio. He recommends starting with index funds first to set the foundation for real estate investing. He is planning on buying more rental properties in the near future, but he plans on doing so slowly so that his investments are not skewed too much towards one type of asset class. Kim also mentions that the paperwork involved in real estate investing should not be underestimated. In conclusion, the comparison between index funds and rental property investments is not as straightforward as it may seem. Both investment options have their own pros and cons, and it is up to the individual to decide which is the better fit for their financial goals and circumstances. However, starting with index funds and building a foundation before venturing into real estate investing is a recommendation that Financial Tortoise's Kim stands by.